Okay. So I'm doing IFRS 16 leases. So you need to understand the concept of leases. It's not difficult. It's a very simple topic. However, it's technical. So you need to understand certain things. Now, we first of all need to understand where leases come in the accounting standard. Where does it fall? And leases falls under PPE. That's where it falls. You can get an asset which you'll be using, but probably it's not for you. Now, you can't say that because the asset legally is not for you, you are not going to recognize it as an asset or as a property, plant, and equipment, or as an investment property. So what I'm trying to tell you is that you can have a situation where the asset doesn't belong to you, but you are the one using the asset for administrative purposes or in the production of goods and services. In that case, that asset can be classified as a property, plant, and equipment, but it is under IFRS 16 as well. Then you can also have a situation where you have an asset. Legally, the asset doesn't belong to you, but you have acquired the right of use of the asset, and you are using that asset to generate rentals or for capital appreciation. In that case, that asset will fall under investment property IAS 40, but it will still fall under IFRS 16. So I want you to understand this too. Now, the principle I was driving at is the principle of substance over form. Leases comes in when the concept of substance over form comes into play. I will introduce it this way. First of all, for you to understand leases, you have to understand the word substance over form. Now, it's a concept. It's one of the qualitative characteristics of general purpose financial report. And it recommends that as accountants, you shouldn't just look at the legal form, but you should always look at the economic substance. So the substance over form states that you always let the economic substance of the transaction prevail over the legal form. Now, what is the economic substance? So you can see that under the substance over form, there are two things. The first thing is what we call the economic substance of a transaction. And the second thing is what we call the legal form of a transaction. So these two. Kindly mute your audio. Right. Now, for you to understand leases, you need to understand these 2 points under substance over form. The moment you understand these, you are done with leases. Please take note. Leases is technical. That's why I've taken my time. Otherwise, I can just rush through and you get to know the concepts and just the calculation. Then we are done. But you need to understand where it comes from. And I'm saying that it comes from the qualitative characteristic called substance over form. As accountants, we've been trained to let the economic substance of a transaction prevail over the legal form. The economic substance of every transaction boils down to the cash flow. Please take note. When we say economic substance, it's the cash flow. That is why when we were doing IFRS 16 PPE, you remember, under the recognition criteria for PPE, there were 2. The first one is that it is probable that the future economic benefits attributable to the asset will flow to the entity. That's the word substance, economic substance. The first requirement for you to say that an asset is PPE reads that you should have that probability, meaning it should be more than likely that the economic substance of the transaction will flow to the entity. And it comes from the word substance over form. That's the economic substance. So it means that you can have an asset where the economic substance is flowing to the entity, but that asset doesn't belong to you. So the legal form talks about the ownership. Please mute your audio. Very, very important. Leases is a topic that please you have to pay attention. I don't want any disturbance. So the legal form talks about the ownership. Ownership. And we are saying that you can have situations where people are using assets. You have a situation where some people buy a vehicle and they give it out for work and pay, right? Now, the one who is using the vehicle is a driver who will be paying you on the basis of work and pay. But legally, the vehicle doesn't belong to him until he finished paying the final installment. So don't you think that work and pay is like a lease? It's like a lease because the driver driving the vehicle on the basis of work and pay is not the one owning that vehicle. But the cash flow, the sales from driving the car and the amount of money that when you bought the car you pay goes to the driver, right? So the substance of the transaction is that the driver gets the cash flow. But the legal form of it is that the car doesn't belong to him. So if that is the case, what do you do under these scenarios? And I'm saying that the economic substance of the transaction help you to know whether to classify the asset under PPE or under investment property. Please take note. So if you see that the economic substance of the transaction is flowing to the entity, right? And the entity is using the assets for administrative purposes, for the production of goods and services, then in that case, that asset, even though it doesn't belong to the entity, should be classified as a PPE. Please take note. And that is under IAS 16. Take note, don't forget, it's not difficult. It's very simple. You need to understand it into detail before you can link it. Then, if in a situation where you see an asset being used by an entity, the entity doesn't own the asset, they don't have the legal ownership, but they are the one using the asset to generate rentals or for capital appreciation, then in that case, that asset should be classified under IAS 40, investment property. You see, it's interesting. So where does leases come into play? So leases come into play because the one who is using the asset is called a lessee. It's simple. The entity that is using the asset and as such is trying to claim that because he's using the asset for administrative purposes or for the production of goods and services, he's classifying it as a PPE. It's called the lessee. Or the entity that is using the asset to generate rentals or for capital appreciation is called the lessee. So if you are using an asset for administrative purposes or for rentals and as such you are classifying it as a PP or investment property and you don't own the asset, don't you think that then it means that you are owing someone? Then you are owing someone and that person is called the lessor, the one who legally owns the asset. So the legal form exposes you to the person called the lessor. And the economic substance exposes you to someone called the lessee. Simple. It's very simple. Any question? If you have a question, kindly ask before I continue, because it becomes complex as and when we are moving on. If you have a question, kindly ask.
But I can't see the screen.
You can't see the screen. Colleagues, can you see the screen?
Yes.
Colleagues, can you see the screen?
Very clear.
Ekua, kindly log out and relog. I'm waiting for you. So let's wait for her. When she logs in, she'll let us know. Any question whilst we are waiting for her? Hey, would they make me some question? Not now. You do feel now. We have said the whole show. Oh my. So from this angle, then it means that I believe you all understand leases now. You understand where it comes from. By hard in accounting where students don't even want to hear of it. It's not difficult. It's very simple. Ekwa, have you logged in? Or
Yes, please, but I missed everything.
You've missed what?
All that you said.
So, but you could hear me, right? But just that you couldn't see the screen.
My network was bad. Okay, I'll manage.
Hey, Kuano, you manage. Okay, so colleagues, ask a question so that I can use that to explain. Then probably she can get it back. If your questions is answered, okay, then let's continue. So now you know where leases come into play. Leases come into play because you can have an asset that doesn't belong to you, but you are the one using the asset. If that is the case, it depends on what you are using the asset for. If you are using the asset for the purposes of administration or for the production of goods and services, then in that case, that asset should be classified as PP because the use is for administrative purposes or for the production of goods and services. Please take note. So that why you treat it under IAS 16. But it doesn't mean leases is discounted. Leases is still there. I will explain where leases comes in. Then if you are using an asset, the asset doesn't belong to you, but you are using the asset for the purposes of you generating rentals or for capital appreciation, then in that case, that asset must fall under investment property, IAS 40. So if you've noticed, it depends on what you are using the asset for. That will tell you whether to classify it as a PPE or as an investment property. But it doesn't mean that leases is out. No. So where does leases come in? It means that so far as you are using the asset and you don't have ownership of the asset, then it means that someone owns the asset. The person who owns the asset is called a lessor. He has the legal ownership. That's the legal form of the transaction. Then so far as you are the one using the asset, you are using it because you've acquired the right of use. Yes, you don't own it, but you are using it. Then it means that you took it from someone. And that person is called the lessee. So if that is the situation, leases comes in when that relationship exists between the lessee and the lessor. That is where leases fall. I don't know whether you've gotten it now. Leases comes in based on the relation between the lessee and the lessor. But it is not based on what you are using the asset for. Take note of that. I'll repeat that. I said leases comes into play because of the relationship that exists between the lessee and the lessor. But it is not based on what you are using the asset for. The lessee is the one using the asset. The lessor is the one who owns the asset, but is not using it. So leases comes in based on the relation between these two parties. So you see a building and they've written to let on it. It means that when you go close to that building or you go and acquire that building, you only acquire the right of use. You talk to the owner and you tell the person that, oh, I want to locate my office premises in this particular location. Now I want to get the right of use of this building. I don't have money to buy it outright. And even the person who is asking you to come and lease it doesn't want to sell. He doesn't want to sell the building to you for you to get the legal ownership. So he wants you to come and acquire the right to use it for some time. So if he wants you to come and acquire the right to use it, then it means that you have to pay that person some money for using the asset. So you are the lessee. You pay the person who owns the building some money to use the asset, and that's called the rentals, right? Now, don't you think that if you now decide to pay this person anytime you use the asset, let's say you want to use the asset for 20 years, do you think the person should give you this asset just like the same way that you would have bought this asset outright on cash basis? No, the person obviously add interest to it before asking you to pay these monies because he believes that time value of money, a CD now is better than a CD tomorrow because it can be invested to earn a return. So he will add interest to the monthly payments you are making or the annual payments you are making. And that brings us to what we call leases. Leases comes in because the lessor adds some interest to what the lessee is supposed to pay because the lessee is not paying all the money outright at a go on the first day. He's taking some period of time to pay. At times it can be 2 years, at times it can be 6 months, at times it can be 100 years. In that case, we have to add interest, and that's what we call the interest rate implicit in the lease. I'm exposing you to a lot of terms, so let me calm down. I'm saying that leases comes in because of the relationship between the lessee and the lessor. Who is the lessee? The one who has acquired the right to use the asset. Who is the lessor? The lessor is the one who owns the asset. So then it means that with leases, there's an asset called the right to use asset. So the lessee spoke to the lessor and told the lessor, I want to use your asset. So can you give me the right to use this asset for some time? So the asset that is exchanged here is called the right of use asset. Please take note. Who is the lessee? Is the person who has acquired the right to use the asset. So the lessee is the person who has acquired the right to use the asset. And the lessor is the person who owns the asset. And has conveyed it to the lessee and has conveyed the right to use to the lessee. So that's what we mean by lessee, lessor, and the asset that moves between the two is called the right to use asset. So that's the fundamental thing about leases. Can I move on to the next page? I want to show something, or probably let me show it here. So it means that we have, again, let me show the lessee and the lessor. Now, don't you think that the lessee owes the lessor? The lessee pays rentals to the lessor. And the lessor has given the lessee the right to use assets. That's what has happened. So the lessee pays the lessor for using the asset. Then the lessor in return gives the lessee the asset to use. Now, again, don't you think that the one who is using the asset, which is the lessee, because of the principle of substance over form, should show the asset in the balance sheet as a non-current asset. So he shows the right to use asset. Let me say, just he shows the asset. So that to be simple. He shows the asset in the statement of financial position as a non-current asset. Now, when he shows the asset, don't you think he also has to show that he's owing the lessor? So in return, he also show the liability. That is what the lessee will do. Now to the lessor will show the income from the rentals received. From the lessee. So that is where leases comes in. So in that case, it means that for purposes of your examination, you should know how to account for leases from the perspective of the lessee, which we call the lessee accounting. Then you should also know how to account for it from the perspective of the lessor, which we call the lessor accounting. Now, under financial reporting, those doing financial reporting or F7, if you are doing ACCA, you need to know the lessee accounting. For those in the final level, those doing corporate reporting, if it was supposed to be ACCA, you are talking about strategic business reporting. You are supposed to know both the lessee accounting and the lessor accounting, right? So that is what you need to know. Any question? Any question? If there's no question, can I move on to the next page? Can I move on to the next page?
Yes.
Okay. Now, I will show you the distinction between IAS 17, the old standard that dealt with leases, and IFRS 16. It's very important to your understanding. Now, someone will then ask, why is it that those who propounded these standards had to change it from IAS 17 and IFRS 16? Isn't it the same? What is the difference? Now, one major distinction is that under IAS 17, the old standard, before you account for leases, you need to distinguish between finance lease and operating lease. So the first thing, IAS 17 classifies leases into finance lease and operating lease. That's what the IAS 17 was doing. Then what it does is that under operating lease, so after it classifies it under operating lease, if you have an operating lease, it is expensed. In the statement of profit and loss. Then if you have a finance lease, it's treated as a loan. When I say it's treated as a loan, is treated as a financial liability with the finance charge. When we say finance charge refers to the interest. With the finance charge, that is the interest recognized in the statement of profit and loss. So that is what the IAS 17 was doing. Now with IFRS 16. What did IFRS 16 do? Before I come to what the IFRS 16 did, in the previous standard IAS 17, when you have leases, if you see that the lease, the tenure of the lease is very short, in that case, you can classify the lease as an operating lease. But with leases that take substantial period of the useful life of the asset, we classify it to be a finance lease. So when you see that the lease is an operating lease, you treat it as a normal rent. So please take note. So those who rent apartments, right, from landlords and landladies, the rent you pay to these landlords and landladies is called operating lease, right? Take note. It means that you've acquired that building under operating lease. So you pay rentals. That rentals you pay is treated as an expense in the income statement. Now, when we say finance lease, in that case, you went to that woman and asked the woman that you want to rent this building for 20 years. Now, you know that 20 years will take substantial period of the useful life of that building. So in that case, you can't say that it's an operating lease, but it's called a finance lease. So because the tenure is that long, it's seen as a financial liability because it's seen as a loan, which has to get interest calculated in the amounts you are paying, and it's called finance lease. What did IFRS 16 do? IFRS 16 came in and said that there has been a lot of issues and research that has gone on in the world, which tries to expense operating lease, and at the end of the day, tries to show finance lease, just the interest portion and the lease obligation in the balance sheet. Now, in the United States, the US Securities and Exchange Commission estimated that most US public companies has approximately about $1.25 trillion, which is in their off-balance sheet. And most of these figure is an operating lease, right? So most people end up renting office premises, renting buildings, but it's for a short period of time. And the accounting standard says that if it's for a short period of time, treat it as an operating lease. So they also end up treating it as an operating lease. They just expense it in the income statement. At the end of the day, a chunk of these monies is going expense in the income statement. So the financial statement in this case situation is not showing a true and fair view of the state of affairs of the entity. So because of that, we are not telling shareholders the truth. So IFRS 16 came in and said that no, don't classify leases into finance and operating lease. Whether the lease is for 1 month, it's a lease, treat it. So IFRS 16 came in under lessee accounting to disregard the classification of leases into finance and operating lease. You take note of that. It's very, very important. So IFRS 16 comes in and say, no, don't classify when you're doing lessee accounting, lessee, the one who has acquired the right to use the asset. Don't classify the lease into finance and operating lease. Whether the lease is for 1 month, or it is for 2 months, or it's for 10 years, or it's for 50 years, it's a lease. Treat it. Make sure that the interest rate that is implicit in the lease is recognized as a finance cost in the statement of profit and loss. Make sure it's done. So what about lessor accounting? So rather, IFRS 16 comes in and say that the lessor, for you, make sure you classify the lease into finance and operating lease before you treat it. So if you've noticed, the lessee does not need to classify. No matter the lease, he should treat it as a lease. But the lessor has to classify the lease into finance lease and operating lease. Take note of that. So that is it about the new standard. The session is going off. Take a shot. When it goes off, kindly rejoin.
TPPC, the Prof's professional class. WhatsApp or call us on 0550225537 or call 0502851858 or 0266897608. Email info@tppcgh.com. Enroll in our courses by visiting our website www.tppcgh.com. Don't forget to subscribe to our channel.